Meta Platforms stock has recently experienced a pullback, and even though the company continues to report strong earnings and revenue growth, investors have reacted cautiously. The decline in Meta's stock is not primarily driven by weak business performance, but rather by concerns surrounding its aggressive spending on artificial intelligence infrastructure. Meta is committing an extremely large amount of capital toward AI development, including data centers, custom chips, and infrastructure upgrades, with total capital expenditures expected to reach well over $100 billion this year. While this level of investment signals long-term ambition, it has raised concerns on Wall Street about near-term profitability and cash flow pressure. One of the main reasons Meta stock has fallen is fear that these heavy investments could temporarily compress profit margins. Even though revenue continues to grow at a strong pace, investors are worried that earnings growth may slow as costs rise significantly. There is also uncertainty about how quickly Meta will be able to turn its AI investments into direct revenue gains. In other words, the market is in a show-me phase, where investors want clearer proof that AI spending will translate into higher profits rather than just long-term potential. Another factor weighing on the stock is broader skepticism around digital advertising maturity in some regions. While Meta's core advertising business remains highly profitable, some investors are concerned that growth in certain markets may be stabilizing rather than accelerating. This creates additional pressure on sentiment, especially when combined with rising expenses. Despite the recent weakness in the stock, the long-term outlook for Meta remains strong. The company continues to generate massive revenue from its family of apps, including Facebook, Instagram, and WhatsApp, and its advertising ecosystem remains one of the most powerful in the world. AI is actually improving Meta's core business by enhancing ad targeting, increasing user engagement, and improving conversion rates for advertisers. This means that while AI spending is high, it is also beginning to support revenue growth at the same time. Looking forward, the key bullish argument for Meta is that it is positioning itself at the center of the AI-driven advertising revolution. With billions of users across its platforms, Meta has unmatched scale, and its AI systems are making its ad network more efficient and more valuable. If the company successfully converts its massive AI investments into sustained earnings growth, the current pullback could eventually be viewed as a long-term buying opportunity rather than a warning sign. In conclusion, Meta stock is falling not because the business is weakening, but because the market is uncertain about the short-term impact of extremely aggressive AI spending. However, the underlying fundamentals remain strong, and the company continues to grow revenue while improving its core advertising engine. The key question moving forward is whether Meta's AI investments will begin to meaningfully accelerate profits, and if they do, today's weakness may end up being part of a larger long-term uptrend. Thanks for watching. If you found this helpful, hit that like and subscribe. Also, check out one of the videos that pop up at the end for another opportunity to profit.